Hello and welcome to today's video. Thanks for joining me as I bring you tax, accounting, and financial information that you can use to improve your financial situation. As we close out 2024 and look forward to 2025, I wanted to review the recent tax changes announced by the IRS for tax year 2025. These changes are important for tax planning purposes. It is important to do your tax planning throughout the year and not wait until the end of the year or when you are ready to file your taxes. I'll now take a look at some of the more impactful changes. Starting with the standard deduction. The IRS adjusts the standard deduction each year for inflation. For single taxpayers and married individuals filing separately for tax year 2025, the standard deduction increases to $15,000 from $14,600 in 2024. For taxpayers who are classified as head of household, who have dependents and pay for more than half of their household expenses, the standard deduction increases to $22,500 for 2025 from $21,900 in 2024. For those who are married and filing a joint return, the standard deduction is $30,000 for 2025 from $29,200 in 2024. As an example, in 2025, a single filer or a married individual filing separately with an income of $70,000 can take the standard deduction and lower their taxable income to $55,000. If this same individual has itemized deductions less than the standard deduction of $15,000, he or she should take the standard deduction instead of the itemized deduction, as this will give them a lower taxable income. However, if their itemized deductions are more than the standard deduction, he or she should take the itemized deduction. And just a reminder of what itemized deductions are, these are things like local taxes, real estate taxes, mortgage interest, charitable contributions, and so on, that a taxpayer can deduct from their income instead of the standard deduction. So whichever one is higher, whether it's the standard deduction or the itemized deductions, that's the one you should take to maximize your tax savings. Let's now take a look at some tax bracket changes for 2025. Each year, the IRS revises tax brackets to keep pace with inflation. 2024 rates are the same as for 2023, but the income subject to each tax bracket increased. And while we are talking about tax changes for 2025, let's not forget we are still in 2024, and you still have time to get the advice you need to reduce your taxes for 2024. So reach out to us if you have not already started your tax planning, and we can get you started on that. Back to the tax rates for 2025. For single filers, tax rates for 2025 range from a low of 10% for those making $11,925 or less to a high of 37% for those making over $26,350. Within the upper and lower bands, there are additional tax rates of 12%, 22%, 24%, 32%, and 35%. As your income rises, you move into a higher tax bracket. For taxpayers who are married and filing jointly, the 10% rate applies to incomes of $23,850 or less, and the highest rate of 37% applies to incomes above $751,600. The rates within the upper and lower bands are the same as those for single filers, but the amount within each bracket is different. For example, a person who makes $15,000 falls into a 12% tax bracket, and a person making $200,000 falls into a 32% tax bracket. We call it a progressive tax system. As your income rises, your tax rate increases as well. When you fall into a certain tax bracket, it doesn't mean that all of your income will be taxed at that rate. Different rates are applied to each size of income that falls within a certain bracket. For example, a single taxpayer with income of $103,350 is in the 22% tax bracket. His income tax is $5,578.50 plus 22% of the amount between $103,350 and $48,475. The $48,475 is where the previous tax bracket ended. $5,578.50 is the sum of 10% on the first $11,925 of income and 12% on the next $36,550. And that $36,550 is the difference between $48,475 and $11,925, which is the beginning and end of the two tax brackets below the 22% bracket. The 22% is the taxpayer's marginal tax rate. That is the rate at which his last dollar of income is taxed. His average tax rate would be lower and is the actual taxes paid divided by his total income. In the example I just went through, the average tax rate is 17%. Let's now take a look at changes to retirement plan contributions for 2025. The annual contribution limit for employees who contribute to 401k and 403b plans increased from $23,000 in 2024 to $23,500 in 2025. Employees over the age of 50 can contribute an additional $7,500 for 2025, and this amount did not change from the previous year. Those aged 60 to 63 can contribute an additional $11,250. Individual retirement account contribution limit for workers below the age of 50 is $7,000 for 2025, and for workers over age 50, the limit is $8,000. The Earned Income Tax Credit, or EITC, for qualified taxpayers who have 3 or more qualifying children for tax year 2025 moved from $7,830 to $8,046. Those are some of the more impactful changes we saw coming for 2025 from the IRS. Let's now take a look at some steps you can take to benefit from the changes. This is an opportune time to take proactive steps to benefit from these changes. You should consult with a tax professional. Meet with your tax advisor to understand how these changes will affect your situation and adjust your tax planning strategies if necessary. Keep detailed records. Maintain accurate records of all income, expenses, and deductions to ensure you are in compliance with all changes and can maximize your tax benefits. Review your financial plans. Revisit and review your financial and estate planning strategies in light of the announced changes. The IRS tax changes impact almost all taxpayers. By understanding and preparing for these changes, you can optimize your tax situation and navigate the evolving tax landscape effectively. Stay proactive, informed, and get professional guidance to ensure compliance and to maximize your tax benefits. That brings me to the end of the video. Thank you for joining. If you have not already done so, please remember to subscribe to the channel for more quality content. See you in the next video.